Yeah, good morning, everyone. So we are seeing volatility in the international and domestic market, mainly driven by the news flow from US, wherein yesterday we saw positive movement, but futures are down again. Uh, the key concern again continue to be tariff, because of which a lot of volatility is happening. We had seen Indian market bouncing back from the low yesterday. Uh, Now, today morning, more of a flattish indications, or we may see some corrections, given that the Asian markets are indicating the lower, or market all are indicating lower trend. Similar things can be visible in India. So uncertainty still persist, and the which can create volatility in the coming period. So overall outlook for the day seems to be more of a neutral and sideways. I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note, and we might witness some sort of a sideways momentum during the day. Yesterday, we witnessed that the Nifty manages to test the beat of 20 days moving average. It has took a support of that level and maintain a positive closing about 24,800, which gives some sort of a relief sign on the technical front. Now, on the for today intraday purpose, the today's support is placed at around 24,800. If it's break that level, then more selling pressure or say the profit booking is likely to be seen into the Nifty, which might take a indices towards 24,730 to 24,660 levels. Whereas on higher side, 24,870 will be the initial resistance level. Any momentum above that level will see the extension of the positive momentum towards 24,940 levels. The overall view will remain a positive as long as Nifty sustains about the 20 DMA, which comes to nearby 24,670 levels. So as long as it's maintained the support levels on the closing basis in the coming few trading sessions, the upside rally can be continued in the near term future as well. Coming towards the bank Nifty for today intraday purpose, the support is placed at around 55,430. Any move below that level will see the extension of some sort of a selling pressure, which might take a bank nifty towards 55,195 to 54,950 levels on the downside. Whereas the resistance is placed at around 55,000. 670 will be the first resistance level. Any move above that level will see the extension of this 55,900 levels on the higher sides. The interesting observations on the weekly chart on the bank nifty is that it's under the formation of the flag pattern. As of now, it is in the consolidation phase of the body of a flag. So positive momentums can be seen if the bank nifty manages to give the very strong breakout of 56,000 psychological mark. Any more above that level, we'll see the swift rally on the higher side, which might take a bank nifty towards 56,400 to 56,800 levels. Whereas on the downside, it has a crucial support nearby 55,000, 54,700 levels on the downside. So as of now, it is in the consolidation phase. A breakout on either side will decide the clear trend of the bank nifty. But as of now, currently, it is under the consolidation phase. So one can definitely hold their long positions and one should wait for the breakout on the higher side. Stock specific hike really looks good on the technical front. This particular stock has given the very strong breakout of the trend lines. And if we look towards on the daily chart, it is well placed above the short term moving averages, say the 20 DMA. Trading in the formations of the higher tops and higher bottom formations. Yesterday, we have seen a very good breakout of 510 levels with a very good volume. So we believe that this rally is likely to be extended towards the 550 and so levels. So those who are having any long positions, they can hold on. If not, they can create a long position at the CMP as well. Downside, you can keep a strict stop loss of a 490 and carry your long positions for a target of 550. That's it from my end. I request Neerav to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, for this series, open interest is quite average. Good part is, we had very high open interest and that has come down. So that is a good sign. PCR is at comfortable levels. Also, VIX yesterday decreased by almost 10% from 18 to 16 and a half. which augurs well for our markets. So both the indicators which were negative are now turning into positive. So yeah, I mean, one can look to add positions once 25,000 levels are broken above. Highest call base is around the 25,000 levels. So once that is broken above, you can see some buying coming in again, which can then again resume the uptrend for Nifty and take it towards the 25,500 levels. So yeah, look out for the same. Good support area is placed around 24,500 levels. From the stock specific front, at this point, banking, which was not doing very well, in that at least PSU banks have shed a lot of open interest, and we expect them to do well also. Some of the private banks are low on open interest, like Kotak and HDFC. So, not much selling can come in now for Bank Nifty, is what we think, at least from a near-term perspective. So one can look to add positions in banks from a near-term perspective. That's it from my side. Like to ask the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. On the result front, Mrs. Bector's Food Specialties posted the result. Result was below expectations. Revenue grew by around 10% on a YY basis, and degrew by around 9% on a sequential basis. It has seen subdued performance in terms of margins, where gross margins stood at around 44.3% versus 47.7% in the same quarter last year. Similarly, EBITDA margin stood at 12.5% versus the expectation of 13.3%. The stock is trading at a PE of around 49 times to FY26 earnings. On the pharma side, Procter and Gamble Health Limited posted the result. Result has improved for the quarter, with revenue grew by 23% on a YY basis and operating margins reported at 26%. The stock is trading at a PE of around 35 times to trailing 12-month CPS. Concord Biotech Limited result has improved. Revenue grew by around 35% on a YY basis, and operating margins reported at 44.3% versus 42.1% in the same quarter last year. The stock is trading at a PE of around 39 times to FY26 earnings, and we will provide the outlook post the con call. Yesterday, Deepak Nitrite hosted its earnings con call. The management has not provided any outlook or guidance for the future. However, it has touched upon various aspects such as market share, margin performance, new products development, and capital investment. In terms of market share, it has indicated no pressure with stable performance, and it will continue to focus to maintain and grow its domestic market share. Further, margins are expected to be higher for FY26 compared to last year, where it is focusing on mitigating the competition from China, and as it focuses on building cost leadership to compete globally. The company is developing new products and capturing the niche demand, and it is primarily catering to pharma, personal care segment, as well as industrial solvents and energy applications. It is investing around 100 crore to set up a R&D center at Vadodara, which is expected to be commissioned by second quarter. And above that, it has a capex plan with aggregate investment of around 8,500 crore for polycarbonate resins project. We recommend to accumulate the stock with a long-term view, where it is currently trading at around 31 times to FY26 earnings. Thank you.
Yeah, Suzlon Energy announced results, and the results were ahead of expectations. Company has reported the strong growth in revenue at around 72% year-on-year in the fourth quarter. Gross margin saw a marginal decline of around 100 basis points, mainly on account of increasing share of WTG, that is turbine and all. rather and reduce the share of operation and maintenance, which is higher gross margin. And EBITDA margin, but because of the high volume, remain stable or improved slightly on quarter basis. Last quarter it was 17%, and this quarter it is 17.5%. Interest and depreciation had seen marginally some increase, mainly on account of the acquisition of one of the company in O&M segment, which has increased the depreciation and interest in this quarter. Overall, order booking was also strong and improved. The order book came in at 5.5 gigawatt against 5 gigawatt in the last quarter. And management has indicated that they are likely to grow at around 60% in FY2026. Industry is also which has implemented around 4.2 gigawatt in the last year, is likely to be north of 6 gigawatt implementation in FY26, and maybe 7 gigawatt in FY27. So in all, wind industry continue to remain strong and likely to grow, though there are some hurdles on account of land acquisitions and transmission line. But that will be overcome through different policies and company measures. So the growth will continue, and that can support the growth in the coming period. The stock is trading at around 35 times FY27 earning, which give limited upside in the near term, but long-term outlook continue to remain positive for Suzlon Industries. Then yesterday, Majgaon Dock has come up with the number, and the numbers were below expectations. Lower EBITDA is also on account of higher provisioning, which came in at 510 crores versus last quarter 178 crores and last year 91 crores. Even adjusted to that, the EBITDA is lower than expectations, so stock may see some corrections today. But looking at the strong order booking, the stock will find a buyer at a lower level. So then Shami Hotel has reported numbers, and the numbers were in line with expectations. Revenue increased by 14% year on year, and EBITDA margin came in at 30.1% versus expectation of 37.3% and last year 30%. And profitability also improved, and company reported 65 crores EBITDA profit versus last year 7 crore and last quarter 22 crores. So overall outlook continue to remain positive, but generally in the first half, that is April to September, the season is off season for the hotel industry. As such, may see some lean period in between, but outlook from a bit longer period, that is from the year-end perspective, looks positive. So any corrections can be used to accumulate this stock. So that's all from us, and I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, gold silver prices have already opened a gap down. There could be some pullback. Gold, if prices are sustaining 95,700, then we might witness a pullback till 96,300, 400 levels, whereby again selling pressure could be witnessed. So from 96,400, one can initiate a sell again and maintain a stop loss of 96,700. On downside again, 96, 95, 700 are the levels where one can book profits. If prices sustains below 95, 700, then we might see further correction. Else, one could book profits, and in silver, one can initiate a sell around 97, 700, 800 levels with a stop loss of 98, 500. So all in all, 98,500 seems to be a resistance area. So unless that is crossing above that, one should wait for a correction till 96,500, 96,000, and then initiate a buy. In metals, copper, one can sell around 864 with a stop loss of 869. On downside, it is expected to test 858, 855. Wherein zinc, one can sell on rise around 255 with a stop loss of 257. Downside 252, 53 is the level where one can take profits. And in crude oil, prices are expected to correct. Sell on rise is the strategy. One can initiate a sell around 50 to 70 with a stop loss of 53.30. If prices sustains below 51.50, then we might see further correction till 5070, 5050. And in natural gas, some pullback is expected. Buy around 300 levels and maintain a stop loss of 290. Again, on upside, 310, 12, one can take profit and also initiate a sell with a stop loss of 320. All in all, could be in a range from 310 to 290. So that's it from us. Thank you very much.